Hi guys, welcome back to the channel. Today I'm going to share one of the safest strategies traders use to win consistently in the market. Now, breakout trading is no doubt one of the most popular and profitable strategies out there. In fact, most traders love trading breakouts. But here's the problem, breakouts fail, and that's where a lot of traders get trapped. You've probably experienced this before. You enter a breakout trade only for price to instantly reverse and stop you out. Yeah, that painful move. That's exactly what I'm talking about. And the truth is this, breakouts fail more often than they succeed. That's why professional traders prefer a smarter and safer approach, the retest strategy. It allows them to trade the same key levels but with less risk, better accuracy, and much cleaner entries. So in this video, I'll show you why retests work better than breakouts, how institutions actually trade support and resistance, and the exact retest strategy you can start using immediately. Make sure you watch till the end because I'll also share the biggest mistake traders make when trading retests, and it's costing them money. I want you to avoid that. Now, if this is your first time here, don't forget to subscribe and turn on notifications because on this channel, I share trading and investment tips, strategies, and market insights to help you build wealth and stay ahead of your trading goals. Also, kindly like this video. Let's try to hit at least 100 likes and share it with your family, close friends, and trading buddies. Alright, so without further ado, let's get right into it. Let's start with the hard truth. Most breakout trades fail because retail traders enter too late. By the time price breaks a resistance level, smart money is already in, liquidity has already been collected, and retail traders become the exit liquidity. That's why you see this pattern all the time. A breakout happens, excitement kicks in, traders rush to enter, and boom, an immediate reversal. This is what we call a false breakout. Institutions already know where retail traders place their stop loss orders. So what do? They push price slightly above resistance, trigger breakouts buy orders, and then dump price right back below the level. But here's where it gets interesting. Instead of chasing breakouts, smart traders wait for the retest. So what exactly is a support and resistance retest? A retest happens when price breaks a key support or resistance level, then pulls back to test that same level and continues in the breakout direction. In this case, old resistance becomes new support and old support becomes new resistance. This pullback is where risk is lower, entries are cleaner, and confirmations are much clearer. Think of it like this, a breakout is the announcement, but a retest is the confirmation, and professional traders trade confirmation, not excitement. Now let's look at real examples on the TradingView chart. Here's SPY, the S&P 500 ETF on the 30 minutes time frame. We had a clear resistance level here, price broke above it, moved up slightly and then pulled back to retest that same level. Notice how that previous resistance now acted as new support. Price held above it and then continued higher, leading to a massive move upward. Here's also QUBT, quantum computing on the 4-hour time frame. This is a clear resistance level here. Price broke above it, moved up slightly, then pulled back to retest that same level, which now acted as new support. Price held above it and then continued higher, leading to a massive move upward. Notice how price pulled back a second time to the new support before reversing back upwards, making a bigger move. Now here's another example on Euro US dollar on the 4-hour time frame. In this case, price broke below support, moved back up to retest the level but failed to break above it. Price got rejected and that old support turned into new resistance. This is a perfect setup for short trades, And as you can see, price moved strongly downward after the retest. Here's why retests work better than breakouts. Number 1, better risk to reward. Because you are entering closer to support or resistance, your stop loss is tighter and your upside target is bigger. Number 2, there is less emotional trading. No FOMO, no chasing price. You simply let price come to you. Number 3, institutional participation. Big players rarely chase breakouts. They wait for pullbacks to reload positions. And when institutions step in, you often see strong price moves because of their large order sizes. And number 4, clear invalidation. If price fails the retest, you exit early. No guessing, no hope trading. But here's the catch, not all retests work. So let me show you the exact rules you need to follow. Let's break this down step by step. Step 1. Identify a clean level. Look for obvious support or resistance where price has had multiple touches, at least 2 or more. Clear reaction zones. Avoid messy or weak levels. Step 2. Wait for a strong break. You want to see a strong candle close beyond the level, expanding volume if available, and little to no hesitation. If price does not close beyond the level, it is not a breakout. So always wait for the candle close. Step 3. Wait for the retest. This is important. So price should pull back slowly, respect the broken level, show rejection like a long wick, a pin bar, or an engulfing candle. This is where most traders lose patience. But remember, patience pays in this game. Step 4 is the entry, stop loss, and the target. For entry, enter after confirmation on the retest. For stop loss, set it below new support or above new resistance. And for the target, aim for previous highs or lows or structure levels, or at least 1 to 2 risk to reward. Some traders also target fixed percentages like 10%, 20% or more. This strategy is simple, repeatable, and powerful. Let's talk about common mistakes. Avoiding this will save you money. Mistake number 1, entering before confirmation. This is how traders fall into false breakout traps. Mistake number 2, trading every retest. Just focus on quality setups, not quantity. Mistake number 3, ignoring market structure. Retest strategies work best in trending markets. Using them in ranging markets often leads to losses. Mistake number 4, trading against the higher time frame trend. And the biggest mistake of all, confusing a pullback with a full reversal. Pullbacks are temporary, usually for a short term, but full reversals take a longer time. Context is everything. The retest strategy works across multiple markets: stocks, Forex, crypto, indices. And the best time frames to use are the 15 minutes, 1 hour, 4 hour, or daily time frame. The higher the time frame, the cleaner and more reliable the retest. So if you stop chasing breakouts and start waiting for retests, your trading accuracy will change. If this video helped you in any way, like the video and subscribe for more smart trading strategies. Thanks for watching. I'll see you in the next video.